Welcome back, everybody, to the FFC podcast, where we talk about different topics, whether it be financial or in real life, in order to help out new traders as well as seasoned ones. Today we're going to talk about the main reason why most people lose money in the markets: emotions. Whether it be the lady at the grocery store, pregnant, yelling at people, or whether it be that asshole that you work with at your job. Everybody deals with emotions different, and not only that, but in markets, there's definitely emotions that drive the decisions that we make. I don't actually wear glasses. I just want to be head ass for the thumbnail type deal. But let's talk about the emotions in the market. In ways, trading is gambling. Not necessarily in the sense of let me throw money on this, let me see if I can make some money. Not necessarily in that sense, but as emotions. When you're on a hot streak at the casino, you want to continue that hot streak. If you're on a hot streak in trading, are you going to do the same shit? More than likely, most people do, unless you have a certain set of rules that you follow and you stick to your plan, basically. I have experience with having a hot streak and going crazy. I talked about in the last podcast with Hugo, and I was in a position where I was down a little bit, and I started getting a win here, a win there, a win there, a win there, and you see this green in your portfolio, and it just drives you. It's like, yes, man, I can't even make this shit at my job. I could a month's work of work. So what is that? 80 hours almost. For me, it's more like 100, 190, not 190, but 90 to 100. And it's just why would I work doing that whenever I could just trade? And you think you know it all, you think you have it all, and you're like, oh, just one more, and then from there I'll quit. One more, and then I'll quit. One more, and then I'll quit. What ends up happening? You lose one, you're like, oh, I know why I lost. This and that, this and that. You get another one. Oh, it was for this reason. The market's against me today. Or, I don't know. You try to find some reason to blame it on someone else without realizing the reason why you lost was because you were overexposed. You start betting with larger position sizes. You start thinking you know it all, going in risk-free, in your mind at least. Just go against everything that you have as a trader, that's rules that you put in place, just because you think you're hot, man. You got to continue this shit, In reality, that's what causes some of the biggest losses, and I lost a lot because of that shit. Unfortunately, I'm still in the works of trying to get back on my feet. I created a whole new trading plan, which I'll talk in another video about, but this helps me stay grounded, and we'll talk about a little bit more about that later. There's this euphoria that comes to winning. Not only that, but there's also greed. Greed is a little bit easier to control than euphoria is, in my opinion, just because if you have a trading plan, whenever you're getting greedy, you know when to get out. When it comes to a trading plan, usually you want to know whenever you're going to get in, when you're going to stop out, when you're going to take profits at, what situations you're going to come across these different plans. Whenever you start getting greedy and be like, should I stay in? I have a chance of making 10 more bucks or 50 more bucks. And you're like, okay, let me just cut it here because it's not worth it. I made all this money already. Why am I going to risk everything for that? There's things that you can also do in order to be able to risk trying to make that money, but not risk losing it all. Such a thing is called stops. Not only that, but there's also fear. Fear in the markets, especially with the whole Ukraine-Russia situation. Everybody was shitting their pants, wondering, oh shit, this is World War III. The world is over. What ended up happening? We had one of the craziest green days we had in a long ass fucking time. Long ass fucking time, man. I don't know if y'all seen it. I'll probably pop it up here on the screen later on whenever I start editing this shit. But crazy day. You buy when others are fearful, and you sell when others are greedy. It doesn't necessarily always work that way. You have to add some things to it, but the main topic or the main theme or moral of the story is to be able to do that. You buy whenever others are fearful, and you sell when others are greedy. Whenever you're fearful, also not only that, whenever you're in your position, let's say it's a long-term position, a long-term hold, you're not worried about the near term, but let's say a Ukraine-Russia situation happens and your market your portfolio tanks, you get worried. You're like, oh shit, maybe I should sell it here so I can get it at a cheaper price. Or maybe I should just get out. I thought I knew what I was doing, but everything's going against me right now. That's not the case. The market, I'm not going to say the market is playing with you, because honestly the market has no emotions, it has no intentions, it just does what it's told to do, which other people who either are experiencing emotions drive it, maybe algorithms that are trading, because most of the trading is done through algorithms by hedge funds and shit like that, people with large sums of money. But the market's just going to do what the market's going to do. The market has nothing against you. And it's a hard thing to be able to put into mind, because we always want to push this blame to someone else rather than internalizing and realizing this is what I'm doing wrong, whether it be my mentality, whether it be my trading plan, whether it be this or that, and be able to learn from each of these experiences and carry it on to the next thing. Another one is anger that I want to talk about. This is revenge trading. A lot of us in our mind, we put it in our head, they're like, you know what, I'm gonna make it no matter what, and then we start throwing money left and right. We win some, don't get me wrong, and we lose some. But when we do lose some, we're like, damn, I lost that. I can't really lose that money. Let me go back and maybe just finesse a trade real quick. I was doing good. Whenever I was doing this strategy, or I was doing good whenever I looked at this pattern or this candlestick. And you go back in there and you end up losing more. And what happens is it's just an endless loop until you break out of it, you snap at it, and realize how much you've lost. And from there, you're like, okay, let me step back. By then, it's too late. Revenge trading could easily destroy your account. And I've experienced all these things, even recently. That's why I had to change the way I carry myself when it comes to investing. So there's definitely some main emotions that are experienced in the markets, and some other things that I also want to mention is something that Warren Buffett said. He said the great thing about investing is that you don't have to swing at every ball that comes your way. So if you're playing baseball, I forgot what analogy he used or what book he talked about, but he was saying that this one baseball player, this famous one, only had a sweet spot within all the, I think it's 77 squares or that make up the strike zone. He only likes a certain range, and if the ball isn't within his range, he isn't going to swing. What Warren Buffett does is that he only invests in stuff that he knows about or he's confident about. He doesn't have to be right all the time. He only needs to be right a few times, but he's only going to swing at the investments that he likes. And he can't strike out. This isn't a game. Cash is a position. Cash is safe. Technically, you're losing to inflation, but the thing is that that's much better than fucking revenge trading or getting shit on by the market or just different stuff. That's way better than that. At least you'll be net zero rather than net negative. So what he was talking about is very true, and it's a very wise way of thinking about things. Don't just do something because your friend told you to, or because you saw some YouTuber do it. Trust what they talk about, but also do your own due diligence and look into it. That's why I also mentioned on this page is that everybody got to go look and do their own thing. Even though I try to be able to provide some information, I don't know everything, and I could be wrong. So go look for some other confluences. Maybe someone else is posting about this. Maybe you heard about this from so and so. Maybe you actually work at one of these companies and you hear about what's going on with the business model. Maybe people have a misconception about it, and you realize, hey, this is the needle in the haystack type deal. But again, just stick to what you know about, and try to really hone in on those and learn those skills. Again, like I mentioned, the trading plan that I have and that I'm going to talk about later in the future, I'm really just going to focus on, when it comes to crypto, Bitcoin, and Ethereum. When it comes to stocks, I'm only going to be focusing on my main 5 tickers that I chart during the time, as well as the indices. I don't want to be able to be a mile wide, inch deep, because at the end of the day, that ain't going to make you money. You're going to have knowledge, you're going to know about things, but at the end of the day, you're not going to be able to take the knowledge and turn it into a trade, a winning trade more specifically. Another thing that I had heard someone mention before is think of the stock market like a casino. At the end of the day, the house is going to win. That's why casinos are still in business. There might be that one person who hits the jackpot or makes 10K here, 5K there. But at the end of the day, the house is going to win. Same thing is true with the stock market. The hedge fund, these big money players, these whales, they're going to win at the end of the day. But you have to make sure that it's not your money that they're winning. At the end of the day, you have to have your trading plan set. You have to understand what you're investing in. You got to do due diligence. And you always got to be willing to learn more, because once you feel like you learned everything, you kind of get cocky. Not cocky necessarily, but you feel like you don't have to do so much more research anymore. That's whenever you start learning some new things, And that's just another thing I want to talk about. Whenever you do fail at something and you're looking back at what you did right, what you did wrong, don't ever use the excuse, or not necessarily don't ever, but don't use it as your main excuse is that, I didn't know about this strategy, that's why this didn't work out. Or I didn't know about this in the markets, that's why I failed at realizing this. At the end of the day, it's our emotions, because that's true after a certain point, because in order to start investing and start trading, you should know something about technical analysis. You should know something about these tickers. You should know about how the market behaves whenever we're in a tightening cycle, or you should know how this behaves in this situation. But once you get past that point and you still use excuses that you don't know enough, you're missing the whole point. The whole point was the emotions side of it. that's where trading psychology and investing psychology as well, really comes into play. You need to know your plan. You need to you need to plan your trade and trade your plan. Make sure that shit works, man. Another thing I wanted to talk up on is that no one wants to get rich slow. That's something else that Warren Buffett said. And it's very true. You see these YouTube pages that have these 100x coin or trading strategy in order to win 90% of the time or something like that. Nobody likes to take these losses. Not only that, but nobody likes to make money slowly over time. And that's what DCAing into the SPY gives you. Everybody could put this money aside, these $50, these $100, these $20, your paycheck or every week. It's the market. Over time, let's say 10 years, 20 years from now, maybe you tripled your money, maybe you quadrupled your money, maybe you 5 or 10 times your money. But we want that now. We want that immediate gratification. And it's hard to break out of that. I'm not gonna lie, I still fall into that shit. That's why I really struggled recently, and that's why again, I wanted to change my plan, how things go, because these emotions were just eating at me. It's like I keep making it a focus that like I have to get this, I have to make it happen, but I was applying it in the wrong areas. I was throwing money at things because I was like, this has to work because these are my goals, these are my milestones, and I have to hit these points because of this, or ABC to D or EFG to F, and it's just, I was forcing all this stuff to happen, and it had to happen within a certain amount of time, and that's what forced me into certain trades that I wasn't necessarily confident in, or maybe I averaged down whenever I really should have cut, and it just sucks. But you also have to realize that you have to take to heart the statistic that most people end up losing money within the first quarter. They usually lose all of it within a year, and they also give up at that point in time. I forgot the exact statistic. I think it was like 70% or 90% of traders, something like that. And we all want to be that small percentage that makes it. But at the end of the day, trading psychology is where it's at. I just wanted to be able to bring up the topic of trading psychology and why it's important to understand that these things really are true. As a new trader, you really should be honing into this and be able to try to understand this as well as paper trading, not really investing your own money. That way you can learn, because if you go in there, balls deep, you can end up clapping yourself and losing so much money you work so hard to get, man. I don't know about y'all, but I literally sweat, I literally bled, and sometimes I even cried in order to try to get through the job, in order to try to get through whatever situation I was going through at the time. And it sucks to be able to see all this money depleted from my account. It's not that I have a love for money, it's just that I recognize all the work and the time that went into saving that. And it really hurt me. And again, that kind of caused that little loop of, like, that's why this has to work, And eventually, I just had to take a step back, breathe, and change something. Change something is the point. But if you could start off, with paper trading, learning the lessons, the technical analysis, learning how certain things behave in certain situations, that's important. But you do it without your money. So that whenever it comes to your money, you'll be able to know how it acts. That's for the trading psychology, that shit doesn't necessarily transfer over. But it's good to be aware of it whenever you first start. So that way, whenever you do move over to actually using your money, you're like, oh yeah, this is what they were talking about. Or, oh yeah, this is what I wrote down these steps for. Or this is why I make my plan in order to get away from this mentality that I have that I'm about to get into this trade, or maybe I'm not even letting myself get out of the trade whenever I really should be. That's a good thing to have if you are a new trader. Understanding what trading psychology is, things you could do to fix it, as well as paper trading. Those are probably my two main things that I want to be able to help. As the seasoned traders, most of y'all probably have more experience than I do with this stuff, but at the end of the day, we all suffered and we all been there when it comes to trading psychology. We all know how it's hard. The thing is that if you see consistent losses over a period of time, something has to change. It's not a matter of what's called of us not picking the right stocks or whatever. It's just a matter of us understanding and really coming up with a good plan that works with us, and that plan solidifies what we believe in, so where we don't have to fall into these traps of emotions that the markets tend to play. So that's all I got to say for today. I'm going to make more parts of this video as for solutions, but I just want to be able to bring awareness to this, as some people don't know what trading psychology is.